this week, the VIX crossed 65, which is the fourth largest measure of volatility in the market, really in the last 40, 50 years. And I've been around for all of them. So it's fourth after 08, 09, the tech and telecom bubble in 2000, and 1987. Now, what does this mean, this volatility alert? It usually means the market is meeting a cathartic moment, or is in a cathartic moment. And it usually means something is changing.
Bitcoinzilla stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad, Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoinzilla today and enjoy the new edge. In today's video, Cathie Wood, with 40 years of experience navigating various market cycles, offers her insights discussing the current market landscape, its effects on different sectors, and strategies for portfolio diversification.
As you know, we have believed for quite some time that the U.S. economy, and maybe the global economy, has been going through a rolling recession ever since the Fed started raising interest rates. Well, the other thing that was happening during that time, apparently, was an increase in the carry trade involving borrowing yen, so really shorting yen, and buying dollars and investing them into higher yielding assets than in Japan, so playing the spread. The other reason this became a very widespread trade is the yen has been depreciating. So shorting yen meant that the investor or the speculator was benefiting from the yen going down. Well, that changed abruptly this week as the Bank of Japan increased rates more than expected and seemed more determined to continue increasing rates than many people expected. So apparently, lots of margin calls and a sell-off in a lot of assets. And now the VIX has calmed down. Now, we're not sure if the carry trade has unwound completely. JP Morgan is saying we're halfway there. So perhaps we'll see some more volatility, but I do believe that the Fed now is on high alert because the stock market seemed to be encouraging the Fed to hold tight, higher for longer, make sure that inflation was out of the system. And as you know, we've been saying for quite some time that inflation is unwinding much faster than we're seeing in the traditional indexes. Right now, the CPI is at 3.1, but by other metrics, we're seeing prices fall. And we would not be surprised to see prices fall a little more broadly as the consumer weakens.
The crypto market recovery on August 9 mirrors the strength witnessed in U.S. equities. The U.S. stock market has gained 5% in valuation over the last 24 hours, with the S&P index posting its best day since November 2022, according to capital markets commentator the Kobayashi letter. The S&P 500 and NASDAQ at 5-day highs, with the S&P 500 adding over $1 trillion market cap. On August 8, with a daily ascent of 0.4%, said the Kobayashi letter, adding, "Markets continue to find relief in the recent comments from the Bank of Japan. The yen carry trade seems to be alive for now." Meanwhile, U.S. initial jobless claims decreased to 235,000 during the week ending July 20, according to the U.S. Department of Labor DOL, released on July 25. The numbers came in below initial estimates of 240,000 and were lower than the previous weekly gains of 250,000. Additionally, continuing claims increased by 21,649 to 1.96 million during the week that ended August 4. The market remains wary of the implications the current macroeconomic conditions could have on the Federal Reserve's monetary policy. While the Federal Open Market Committee, FOMC, is expected to meet on September 18, there are high expectations of the first rate cut since March 2020. Market participants are expecting 1 to 2 interest rate cuts toward the end of the year, in September and November. According to data from CME Group's FedWatch tool, the odds of a rate cut coming at the September FOMC meeting are around 100%.
Now, why is the consumer going to weaken or continue weakening? We believe it's because corporations are losing pricing power. And in order to salvage margins, they're going to be doing two things. They will be laying people off, and they will be accelerating moves to increase productivity. So the unemployment rate will go up. That certainly is getting the Fed to change its spots, as we're listening to Chairman Powell. And I think now that household net worth being hurt by the stock market going down is another reason that the Fed is going to relent. Now, one last thought here. Interest rates coming down should be a very positive for the equity markets, but they will not arrest a recession very quickly. In fact, if consumers and businesses know that interest rates and maybe prices are coming down, what will they do? They will wait. Now, the market in its wisdom, we believe, is already understands much of what I have told you. And so we do think that lower interest rates, when this carry trade is completely unwound, that lower interest rates are going to be the defining factor in terms of a rotation in the market away from a very concentrated group of stocks to a much broader based group of stocks. And as I just mentioned, innovation solves problems. So productivity gains are certainly what we believe is going to happen as AI proliferates throughout the global economy. So we just wanted to give you some insights based on lots of years of experience, having experienced these volatility, cathartic moments. It usually means there is a rotation into a new kind of thinking underway. And we do believe that will play out during the rest of this year.
The crypto market's ongoing gains align with the resumption of inflows into the U.S.-based spot Bitcoin ETF. As of August 9, these funds were managing around $54.31 billion worth of BTC, up from $48.43 billion on August 5. Data from Farside Investors reveals that after 3 days of back-to-back outflows from these investment products, the spot Bitcoin ETF capital flows turned positive over the past 2 days, recording net inflows of $45.1 million and $194.6 million on August 8 and August 9, respectively. Meanwhile, the Brazil Securities and Exchange Commission (DVM Brazil Securities and Exchange Commission) approved the first spot Solana ETF. This signals a broader trend following the approval of spot Bitcoin and Ethereum ETF by various countries, potentially paving the way for more crypto ETF around the world. This development highlights the growing acceptance and adoption of Bitcoin and other cryptocurrencies in the traditional financial sector, helping the crypto market's valuation rise today. The uptick in the crypto market coincides with accelerated short liquidations across derivatives markets in the last 24 hours. Data from CoinGlass reveals that short traders, those betting on the crypto market's downside, have witnessed a total of $110.92 million worth of liquidations in the last 24 hours. In comparison, long traders suffered over $76.81 million in liquidations in the same period. Short Bitcoin liquidations stand at $58.6 million, with the tally increasing at the time of publication. When short positions are liquidated, Traders who bet on prices going down are forced to sell their positions, often at a loss. The resulting increase in buying pressure has driven the crypto market valuation up today. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.